Here we are on the morning of Thursday, October 24th, just before the market opened. Here, this is the 5-minute candle of the S&P E-mini at 9:25. When the market opens, the stochastics is at an overbought position, but of course, we can't really tell which way the market is going to open just because the stochastics is overbought. The market has been climbing steadily through the evening. This is at 4:20 a.m. and at 9:25 the market opens at 30.13. And let's look candle by candle beginning at 9:30. First candle is a long candle down, a bearish engulfing pattern, and quite a long candle at that. The stochastics, of course, start moving down. Will the market continue going down? Well, this is a fog of war move. And remember, the first move early in the morning is usually has some legs to it, particularly if the candle has some length to it. The next candle, also a bearish move down. Prices substantially getting lower as the morning moves on. Next candle, a doji. Now, a doji typically indicates tug of war between the bulls and the bears, but notice that the prices had declined significantly below the previous candle. So, if you took a position just after the market opened, you might have been tempted to hop off here when you saw the doji. Still, even though the prices stabilized, the price closed at 3,009, prices did reach a point significantly lower than the previous candle. Let's go on to the next candle. If the doji didn't shake you off, you were rewarded by the next candle also closing significantly down, even though the bulls managed to push prices back up, but still lower than the previous candle. The next candle, big move down. Stochastics are at an oversold position, and the market has declined at this point from 30.14 to 3,004, a 10-point drop in just 20 minutes. The next candle, also a move down, with prices closing significantly below the previous candle. With the market price at 3,003, what happens to the next candle? Also a big move down. Now the prices are at 3,000. We are half an hour into the session. This is the 10 o'clock candle. Moving forward from there, do we stay on? Well, look what happens. The next candle is a move up, but even though the price has moved up, should you have hopped off here? Well, look what happens at the lower end of the price. The price never reaches the low of the previous candle. This would have been a point where this candle closed to get out, and you would have made just about a 10-point profit. And the telltale sign of getting out was, of course, the stochastics being greatly oversold, but significantly right over here, this candle reached a low of 3,000, and the previous candle reached a low of 29.9975. So just that little bit of price determination over here would have been an indication to get out. So that's our chart reading session for Thursday, October 24th, for the first move in the morning.